Hey, good morning, everybody. This is the professor with Day Trading for Success. Today, we're going to be doing some interesting stuff. First of all, I have a new open strategy layout that I'll be giving away for free at the end of this video, so you can just download it to your own Thinkorswim layout. Also, the scalping indicator, again, I'll make available for free. And then what we're going to do today is I'm going to go over this layout with you can get on your own, as well as we're going to trade with a group of people here. And then after I'm done trading, I'm going to kind of give an analysis about what happened. So today we'll be doing the open strategy that's had a lot more backtesting since my last video a week or two ago. And a lot of things have changed. So please read this disclaimer. I'm not a licensed financial advisor. This is an entertainment channel showing you tips and tricks, different ways to trade, different strategies you might want to try, but you should always seek the advice of someone you trust, a professional advisor. So please read that. So this is the new layout. Let's go over this again for a minute. Then we'll go over what our strategy is going to be today. So this is a 1-minute chart. This is the level 2. This is a 30-minute chart. This is the active trader. This is the scalpers indicator. This is another 1-minute chart. This is a 5-minute chart. This is a SPY set to look at separately. That's why it's a different color. The daily and then the news. So those are all minimized for screen accuracy, screen control, not accuracy. So what this strategy is the basic strategy is, if you don't know from watching some of the other videos, is that you have to break the pre-market high or the pre-market low before you enter into a trade. That's how the strategy works. And then you write it to where you go to what we call profit lines. So we're going to say, why are those there? And how do you trade this? So the actual trading of the open strategy is meant to last only 15 minutes, and that's it. So there will be a book about it at some point. I don't know. They keep pushing it back. Now they're doing a swing strategy book. So the strategies that we cover here on this channel are the RV strategy, which, of course, since last March has been making hundreds of thousands of dollars, even millions for some people. The open strategy, we have a couple of different ones. Both are based on breaking the pre-market high or pre-market low. This is quite a bit different, and I'll talk about why it's changed here. So we will be starting to trade live in about 11 minutes, 12, about 12 minutes, 14 minutes. 14 minutes? Yes, okay, somewhere in there. So you don't go in the trade until it breaks either the pre-market high or pre-market low. If it's already broken it, and that's what these lines are, if it's already broken it, then you use these profit lines as your next entry or exit. So if it broke it, then you would take profit up here. So that's why that's how it works. So there'll be more and more profit lines as you go up. Now, when you're trading, and we're going to trade only market, everybody here is going to trade 1,000 shares, all right? When we're trading, if you're going long, you're only going long above the pre-market high. If you're going short, you're only going short below the pre-market low. And that's how it's going to work. You don't go back and forth. You don't reverse. You don't do the way you've seen me trade. This strategy is different, and you're only going to be trading for 5, 10, or 15 minutes max, and then you're done, because it doesn't work as well based on the pre-market or the profit lines. I mean, people have been trading it, but it doesn't work as well. You should switch probably to the RV strategy at 10 o'clock, which works real well. And there's tons and tons of videos about that. So from the last time, there was a lot of discussion. A lot of people have been trading this over the last couple of weeks. This is still in the beta testing zone, but it's doing really well for these people. I think we kind of passed over a hump about how to trade this. So, and basically, one of the problems is where do you set your pre-market high and low? Where and when do you set that? Do you wait to the last second and throw them on there real quick and then get ready to trade? That's a lot of anxiety to do that, right? And also at the last 3-5 minutes, there's a lot of movement that people are getting ready, and there's more breaking news or whatever, and it might not be the true range of what we should expect. Much like the opening candle, you never want to trade when it first opens. So seeing all the back testing, watching what happened 5 minutes before, it was like, well, that's that's craziness, because it might be way up here and then way down here, and then the rest of the time it never hits the pre-market high or pre-market low. The other thing that we've changed is you do not want to do an ATR that's above 6. Really, 4 or 5 is better, because you do need enough volume to work in. And we'll have scanner settings for this and everything, so you can find the stocks. But any stock that's like 6 ATR or below is probably going to be okay. Well, I wouldn't go below 3, say. I mean, Apple's like a 3.5 or something. And Apple does work with this strategy. It doesn't work as well because it doesn't move very much because of that low ATR. So you're really looking for an ATR that has some volume and then moves a little bit of a range, so you can at least take advantage of different profit lines. And we'll talk about why those are there and how they got there, and why a lot of lines shouldn't bother you in any way when we open up this strategy to trade it. So basically, yeah, so what did we do about this problem with the pre-market, right? Well, it ended up with all the different back testing that, because you didn't want huge swings like that happened right when the market closed, and then you didn't want them at 4 a.m. It wasn't necessarily accurate either, with big dumps and drops and algorithm trades and everything else that could skew where the high and low really are going to be at the day. So through lots of backtesting, it came out to be that the 30-minute candle was what you want for this strategy. And the 30-minute candle that closes at 9 o'clock, well, I'm East Coast time, New York Stock Exchange. So the 30-minute candle that closes a half hour before market opens. Okay, when that closes, you mark just the body, not the wick, high and low of that candle. And this seems to be working really well, giving us a mean average. Because let's face it, if it breaks, you want these pretty tight. You want these high and low pretty tight, because you want it to break one of them. And then you want to get into your profit taking as quickly as you can. And then you want to trade for 5, 10, 15 minutes, and you want to stop. So where are these profit taking lines from? This is a 5-minute chart, okay, 5 days back. So I did a Fibonacci. Those are profit making lines. So it's always left to right, whether it be high to low or low to high. Mark your Fibonacci on a 5-day, 5-minute chart. So there's some of our profit taking. And then wherever the stock did a hard stop and turned around, you want to mark a pivot point. You want to mark them out, right? You want to mark them out. See how they're all marked out? You want to pick them up and mark them out. That one's missed. Oh, no, because it hits right there. And then, you want to, and then as we get over here, now we're more to where we're really going to, I quickly just marked as many as I saw, but, obviously probably won't go, past here or past here, but they're here just in case. I did a little pivot there. This one should be green. That's a wrong. So I marked them green if they were above the pre-market high, and then red if they're below the pre-market low. So red means you're shorting, green means you're going long. You do not need to write the word profit. You don't even need to make them green and red. I'm doing this so it's easier and you don't get confused, and it's easier to teach people what we're doing here. But basically picking the pivot points. Why would we do such a thing? Well, because the stock turned around once before. Well, you might say, well, that doesn't mean it's going to do it again. It does not mean it's going to do it again. You would be right to say that. However, there's a better chance it will than not, right? There's a better than a 50% chance it will do it again. All of technical analysis is based on patterns. Everything. And everybody has their own cup of tea and their own poison about what patterns and what indicator they want to use and all that. And there's 1,000 indicators and all different ways you can do 2-minute patterns, 5-minute patterns, 15-minute patterns. You can do 22-minute patterns. So it's just everybody has a different way. This is this strategy. Before I get all these emails, this is this strategy. And if you have a strategy that you don't need all these lines and you're making money, man, stick to that strategy. Stick to it. Don't mess up your world. You did it. You're there. You've made it. That's a hard climb. If you're there, in fact, it would be great if you'd share that with us. We would love to see your strategy. The thing is that every strategy, the strategies work different for different people because of our makeup and how we trade things. This strategy might be horrible. This is too fast. I can't do this. What do you mean get out of you're only trading market? What are you, out of your mind? Why aren't you doing limit orders? My God, I want to set it and forget it. I don't want to watch this. This is ridiculous. I want to go on with my life and my day. This is too much pressure. I've heard everything. Everybody trades, and that was nowhere near everything, just a brief, but everybody trades the way they like to trade. Simple as that. And some people just want to have a money manager manage their money. Most people, for that matter, want to do that. But there was this huge influx of COVID with day traders, and all these new strategies came out. And the other thing, as you know from remember about the books, guys, Day Trading Volume 1, 2, and 3, the best-selling books about day trading, talk about the RV strategy as well as candlestick patterns. What made me think of it is that, after for the advent of COVID, when so many day traders came in, patterns that were only respected for the most part in daily patterns now are respected on 1 minute, 2 minute, 5 minute chart patterns, because so many people see the same pattern and then go and then react according to it, and then it becomes a self-fulfilling prophecy based on that. And that has changed in the last few years, which everybody has seen that now candlestick patterns can be much more respected. But again, they may not work. So, you have to always assume that whatever you're following isn't going to work, and be ready to react quickly, because the biggest thing about trading is your ability to discern the situation that nobody can do as well as you. You have to train yourself. You can't follow somebody and go, I'm going to go in because he went in. I'm going to go out because he went out. You can't do it. You can't keep up with it. You can't. If you don't understand why the person's doing it, you have no chance. As soon as that person doesn't want to be around you, then you can't do that, or how much money you're going to pay, and it really doesn't work. You need to learn yourself. And when you do that, then you use your ability to discern the trade in and out. But it comes right down to discretion in the end, no matter what strategy you're following, no matter what of the 1,000 indicators that you decide you're going to use. Now, this is pretty simple as far as indicators go. So we just basically marked out the pivot points. We marked out the high and low. We didn't use an indicator here to do that. We do have the scalping indicator here, which is amazing. As you know, by the way, this is free on the channel. I'll put a link to it here along with the books, 5 books. Don't forget Trading in the Zone, which really helps you be discerning, and The Best Loser Wins, which would tell you that you don't need patterns necessarily to trade, but also let the winners run and cut the losers. He talks about don't set a profit until it turns around. Wait, take as much as you possibly can until it turns around. Why would you want to set a profit and get out on a stock that's going your way, right? That's his, and he has it's not the only thing he talks about, but that's one of the points I garnered from him that I thought was a pretty important point. So we're getting closer to market open. We're going to start trading, and then I will recap. I don't expect to go more than 5, 10, 15 minutes. This is only supposed to take like a half hour out of your day, 45 minutes out of your day to set it up, to draw these lines, figure out which stock. We will have scanner readings for the stocks that will have the volume, the ATR. We're actually working with Thinkorswim right now to see if we can get a better pre-market indicator for stock movement. They don't really. Well, apparently this guy thinks he does at Thinkorswim, so we're waiting to see it. Everybody else is saying we have to do a custom script, but it would be good to have, to help pick the stock on the scanner, to have a very consolidating pre-market plan. But the 30-minute candle kind of solved that problem, so we're not going way back to these high movements that we may never get out of the pre-market, if you know what I mean, to be able to get into the trade. Wow, look at how much it changed. I thought we were going to do long, and now it looks like we're going to be doing short. So remember, if we've already broken it, then each one of these lines become the next thing that's where we would enter. If it's above it and it goes below, that's our new pre-market. So it might be down here by the time we start in a few minutes. So we will not be trading the first candle. You do not want to get involved with that in this strategy. We will be trading markets, so we're dealing with a couple of problems because of that. We're dealing with a spread that could be as much as 20 cents. And with 1,000 shares, that's $200. We're dealing with the fact that we have to have 1,000 shares picked up. Now, if any of you have traded AMD, even, between 500 and 1,000 shares, you will see that it gets picked up instantly. Every once in a while, you hear a little jing, jing, like you can see that it's gone down to the next, you can hear that it's gone down to the next price level to pick it up. We got about a minute, guys, at least before the market opens, and another minute to pick a direction. If it's already broken, then we know we're going to trade immediately. If it's not broken, we're not trading. So we wait for it to break. It looks like we'll be down here, though. So yeah, we have to, it's going to be, because it's market and we want to get picked up all the time and not do limit with this strategy, because there's no time to mess around with limit and then flatten or try to type in stuff. There's no time. You're going to hit these levels quickly. When you hit a profit level, like if this was coming down here, you get out. You don't ride it back up. When you're going short, you're only going short. When it breaks back up here, you get to go long. And then you wait for it to come up and then break it back through the next level. Then you get in again. It's as simple as that. Okay, the market's open, guys. So it looks like we're going to stay short here. So let's see what happens. Now, I want to see this candle close before I get in, but wow. So there you go. How many people just lost money on that trade trying to trade that candle? That's the scary stuff right there, guys. So now it's coming back. I mean, if you held it, then you don't have a problem. Okay, well, anyway, it looked like it was going to keep going for a second there. So I was like, told you. But it happens more times than not here. So I am about to take a trade, even though it appears I might not be. I'm just waiting to see. God, here it goes again. Are we going to go long here today or short here today? I don't know what we're going to do here. Everybody's ready there. Yeah, so in just a few seconds, guys, if it's breaking back up there and down, I'm going to get in. I'm going to get in. God, what did I get that? It jumped down right when I got it, 50. So I'm way down here at the first technically profit taking place, but I'm not going to take it there. Now, if it breaks back through here, obviously I'm going to reverse my position. So there's the first profit taking right there. I mean, to me, I would rather wait a little lower. This is your option to take this. You can take this if it gets down here again, or you can wait for it to go a little further. I will definitely take it on the next line. And boy, that was close. That was close. Yep. Okay. So I got out. So the first trade was $549 on 1,000 shares. How'd everybody do? Wow. So now we're going to wait. Now we can get back in here, or we can get back in here, or we can get back in if it breaks through here. So I'm going to give it a breath. I kind of like it to break here unless I see it go back to the pre-market. So yeah, this is just consolidating within the profit line. So I'm waiting a second, but it does look like I'm going to go short here. Either at this one again, it almost got me in there. It almost pulled me in there. Nope. Oh, I'm glad I didn't go in. Wow. Now I'm going to go in. So as it broke back down here, so what did I get that at? 56. So I'm like right just below that line. Now that I've got a cushion, and it's pretty good, I want to try to go beyond this line. But that's not bad right there. I mean, right here would be a nice profit again. Oh, wow, I'm losing money here. What happened? Oh. Okay, well, that's a little scary. I'm right at the top here, so now that would typically be a place where you'd want to cut your losses. We haven't talked about that. So right around here, but certainly if it breaks the pre-market high, I have to get out. Wow, huh? It's going to shake me out here. It looks like it's reversing direction. Let's just see here. Nope. Nope. So I'm still buying either way. So there's the first line, which I'm more, wow, the way it's doing that, it makes me want to take this, I got to tell you. It doesn't look like it's going to go down, guys. But I'd like to see it at least get back down here where we got it. So we have to just ride it a second. It's not, you know, I'm going to make sure that I don't lose money on this trade. I mean, lose money on the day. If it starts to go back up, I'm going to get out. You've seen how this is, though. I mean, wow. So it really does look like it wants to go up here. So I don't see anything on the level 2. I don't see anything pushing it. This is where you just got to get some backbone, hold it. You got a cushion, you know, try not to get this back into the red, you know. Okay, there we go. There we go, 300 on this trade. Okay, can it get back down to where it was? Can it back down? And how strong will it be if it does, guys? Let's see. I might hold into it for a second. Hold into it. Look at that. It broke it. Wow, is it going to go again? I'm going to get out soon. I'm going to get out right there. All right, so I don't know if it's going to keep going, but I was going to take a chance. I thought I might get it up here. I don't know where I got it, but I think I got it closer to down here. So now we want to get in again in just a second here. So, wow. Wish I would have got in right there. So if it breaks back up and breaks back down, I'm gonna short it again. So now these are our new pre-market lines. That's how you trade this. And it's going back up. The question is, how far up is it going to go? Now I'm trying to catch it on a rise, or some people might, if you were going long, you call it a dip. Wow, I might just have to take it right there. That's 67.19. That's not, I don't feel comfortable, but if it just keeps going down, I just got to get in it, and I'm losing the trade. Okay, so as it pulls back up here, I'm going to try to get it, guys. I'm going to try to get it as it pulls back up. If it does pull back up. Yeah, I'm going to take that. What did I get that at? 70. So I shorted on the pull, but for I'm going long here. I'm going short here. I'm based on this. So I know it was going up, but I'm not going long with it. So that's why I'm okay to do that according to the rules. So I've already got $370. So wow, I'm gonna take profit at that line. I lost a little there. It looked like it was going to go back up. Wow. So these are a little hard to read here. Oh, finally the ask is reconciled. That was driving me up the wall. I'm gonna take it again based on that. It doesn't seem like it's giving us a lot of room to do what it's doing here. So looking for a little bit more. Is it going to go down to a lower profit thing there? I'd sure like to see it go down to the lower profit, a little lower profit there, like the next one down. It doesn't look like it's going to do it. Yeah, I'm just not going to do it. I'm just going to get out. Okay. Well, I'm gonna call that a day for the open strategy, and here's the reason why. I'm gonna start doing a recap here. So that's not bad. $1,800 in a few minutes. 1, 2, 3, 4, 5, 6, 7, 8 minutes. When it starts to do this because of your spread and your slippage, this is bad news. I got really lucky to scalp out another $300 or $400 here. This could have just started to chop away, even though it looked like I was having a winning trade. So I don't like to see this consolidation. And now, how long will this go on? So I could sit here and wait, but I'm just going to call it a day since I'm trading with you guys. Everybody here can obviously trade on. So let's recap what happened here. Didn't even pull my 5-minute. And the thing is that you don't need to. You normally you want to look for chart alignment. You want to look for, what are the 5-minute people thinking? Well, they were just thinking short. That's what they were thinking. What were the 30-minute people? Short. So scalpers indicator went off the thing. And the thing is with these profit lines, which is so great, is you kind of just need to look at the lines and react quickly. Even though I tried with this strategy to put everything in my view, as easy as I could. But see, this theoretically, I should try to catch this going down again, or I need to wait for it to break here. Me catching those each time was really risky. So we don't have any big candles. This is a spinning top. So let's talk about patterns for a second. This is a spinning top. That's telling me it's going to turn around. Yet I believe I traded this. Now you have a inverted hammer. This is also this is telling you it's going to go up. This is telling you it's going to go up. This is a rickshaw man, a bullish rickshaw man telling it's going to go up. So all three of these patterns, each and every one, based on a pivot point here, said it was going to go up. And that's exactly what it's doing. It's going up. So do I want to try to take little trades in here? No, I do not. And theoretically, I can't go long here. Yeah, it says it's going to go up, but that's not our strategy. And you might see me do this on other occasions where I'm just riding it up and down. But it really is a crapshoot when it's this tight and you have this many shares. So if this keeps going up, you'll see me, if I was going to continue to trade, you would see me trade it up here, But these are reversal patterns, man. You don't want to mess around with those. No, then I'd start to look, well, God, I really want to trade. I really want to trade. The kiss of death, right? I'm bored. The kiss of death. I got to get some more money. A kiss of death. That if you're going to keep trading, you need alignment. It's too early for that, You can't really, the scalping indicator is reading the same indecision as you see right here. You just don't have anything, but I got a feeling in my toe kind of thing. And you don't want to trade that way, Now, finally, see, these never really reversed, which actually scares me. I mean, this could possibly be an entry, but I would still be very timid. I mean, that could have been too, but you didn't know for sure. We lost our big momentum. We lost our big volume. It's gone down. So anyway, you saw me take the trades. I think that I got in here right after it broke down the pre-market. I managed to capitalize on the second profit line. And then I waited for it to go back up and then drop. And I managed to profit, I believe again, right on the second profit line one more time. And then I got out. Now I was out. I watched it for a second. I can't remember if I got in here. I think I did get in here. And then it got panicky here because it went way up and then it went way up here. But it wasn't enough because of my nice big cushion, and it didn't blow through the pre-market high. I was watching the numbers, and then I jumped back, and then I got this huge trade, I think anyway. I got, I'm up to 1,800, so I must have captured most of that. And then I think here I started to feel, that big candle. Then I saw the spinning top close, and I think I might have traded this, but and this closed as an inverted hammer. So that was telling me it was going to go up, and so was this. So this is when I said, no dice. Read read volume 2 and 3. Learn your patterns because they really give you an edge. Nothing's for sure, guys. You know that, but it helps to know these things. The more you know, the better chance, the more of an edge. The more it's all a probability game. So you can have 20 bad trades in a row and then 20 good trades in a row, or a mixed match of that. Or you could have 50 bad trades in a row, which means hopefully you had really low share size. But trade in a simulator until you start to get that feel like you see that picture in the picture. All right, so I'm going to be doing a lot of these, this type of trading, so everybody can get a feel for this. As well as I'll still be doing some RV. But if you're new to the channel, check the trading archives. There's lots of RV strategy. Don't forget to subscribe and give us a thumbs up, guys. And my sign-off line is stay inquisitive and stay green. And I will see you soon, guys. Thanks for watching.